Welcome to Markets Now. I'm Michelle Rook along with Oliver Sloup with Blue Line Futures, and a down day on Tuesday with the exception of the cattle market, and grains kind of faded some of those early gains, Oliver, and how much of that was just kind of technical selling hitting the market again ahead of the Fed meeting?
Yeah, I think tactical selling, just some risk off ahead of that Federal Reserve meeting. And seasonally, we're going to get this rise in volatility, right? We come out of the winter and we go into the spring and summer where there's a tremendous amount of uncertainty with regards to planting here in the States and weather and how that'll impact the crops. And so you have that uncertainty, which creates that volatility. And that's certainly what we're seeing right now ahead of that big report here at the end of the month, which I think will probably keep things interesting. We had a pretty sharp reversal in some of these grain markets. Corn, soybeans, and wheat all finished well off of the highs. I think soybeans were about 30 cents off the highs. And does that mean that the market's just going to continue to roll over? I don't necessarily think that's going to be the case. I think psychologically, that new crop November contract might be pretty sticky near that $13 level. And when you're looking at the soybean market, the previous day's low 1462, the 200-day moving average at 1459, those are going to be some pretty key levels to keep a very close eye on. And then looking at the seasonal aspect, we had a bullish seasonal trend start for July soybeans March 19th. That lasts all the way through April 30th, and that's trended higher for 13 out of the last 15 years, with the average rally being about 40 cents. So there are some silver linings in the weak price action that we've seen here as of late.
Yeah, and of course the wheat market kind of pulled down corn. The corn market started off on solid footing. We've had all this China business. Is that kind of holding that market together here, the improved export demand or not?
I believe so. The export business has been a kind of a dark cloud hanging over the corn market really since last fall. But I think we've seen flash sales 5 out of the last 6 days for a total of about 88 million bushels. So the fact that we're starting to see some demand come into the market after the futures broke down, I think is encouraging. Now we do need to see the May contract get out above 640. If we can do that, I think you may entice some funds to get back into the market. We know that they've been liquidating long positions over the last couple of weeks, but if we can get a close out above 640, I really think that opens the door to a cluster of major moving averages. You've got the 50, the 100, and the 200-day moving average all coming in near 658 to 662. So that would be the target again if we can get a close out above 640. The weakness in today's session, it's not really what I was rooting for, but I still think there's light at the end of the tunnel for some of these markets.
You bet. And the wheat market, some of that technical selling, was it profit taking too? Because we did have higher weekly closes in all the wheats last week.
Yeah, wheat was up, I think, 31 cents for the week last week. And I think you saw some premium maybe come back into the market, some short covering come into the market ahead of that Black Sea grain deal deadline on March 18th. And maybe there were some concerns that there would be more tensions and more pushback from Russia. It sounds like things are fairly well ironed out. So the fact that there wasn't any real risk there as far as disruptions go, I think invited sellers back into the market. And I think a lot of it can be attributed to technicals too. As you had mentioned, we were hovering right around that psychologically significant $7 handle. The fact that the bulls weren't really able to get a conviction close or consecutive closes out above $7 invited the shorts back into the market at a lot more attractive price than where we finished last week's trade.
You bet. All eyes on the Fed meeting. What's your guess for tomorrow? Are we going to see 25 basis point move or not?
25 basis points, it seems pretty well baked into the market at this point. I think more importantly is going to be what Jerome Powell says at the 1:30 Central Time press conference and how the Fed is going to take steps going forward. Now, looking at some of the futures markets and some of the analysts out there, they're talking about potential cuts starting in June with the potential of a full 1 point cut by September. So that's going to be something to keep a very close eye on. And as mentioned from the start of this conversation here, we're going to see this volatility pick up through the spring and into the summer, and it's going to be here to stay for a while.
New lows for the move in the cattle market yesterday, and then we kind of saw a little bit of a rebound today. Can we keep that going, do you think, here, if we get something favorable out of the Fed meeting or not?
Yeah, so if we get something favorable out of the Fed or at least kind of a snoozer, I think this cattle market can claw back some of the losses that we've seen as of late. Now, there is a bearish seasonal that starts March 21st and goes through April 6th. That's trended lower for 12 out of the last 15 years, with the average pullback being about $2. But I think if you kind of zoom out and look at where we came from, I think some of that seasonality weakness that we get this time of year may have already played out. The cash market's been pretty sticky near 164 to 165. So I really wouldn't be surprised to see this market stabilize a little bit. We know the numbers are low. So I wouldn't be surprised to see that April contract work back towards that gap at 164. And at that point, I think the cash is really going to have to start to firm up for the bulls to get much more of a move above there.
And hogs, it seems like the funds have sold on just every uptick, any bit of strength that we get in the market here. Where do you see a bottom coming in?
That's the $1 million question, and I'm getting asked that pretty much daily as of now. When you get a sell-off like this, you really want to see that capitulation where it's just forced liquidation and then buyers step in. And it looked like we were going to get some of that on Friday, but there really wasn't a whole lot of follow through into the close to get us into positive territory. And we've seen continued weakness to start this week's trade. So I'm still waiting for that capitulation, that forced liquidation from a lot of margin departments. I think that's going to set up for a pretty darn good opportunity eventually. But again, it's about staying power, not trying to be a hero and catch a falling knife. What we're looking at as a potential catalyst to firm up the hogs is a bullish seasonal that starts at the end of the month. That's for the December contract. From March 30th to June 10th, we've seen December hogs rally for 12 out of the last 15 years. So going into the end of the month, in this oversold condition, I think there might be an opportunity setting up here in the near future.
Oh, yeah, it's been a wicked slide, that's for sure. All right, thanks for joining us. Oliver Sloup with Blue Line Futures, and that's Markets Now.